Good Friday morning, Market Chameleons, and everyone joining us for the first time. Thanks for coming by and checking out the Market Chameleon pre-market show with this man, Dimitri Parkamanek, all the way from sunny South Jersey. How you doing, buddy?
Good morning, Will. How are you?
Good. You want to start with a disclaimer?
Yep. Good morning, everyone. Before we get started, keep in mind, Will and I in Market Chameleon, we're not a registered investment advisor. We're not a broker-dealer. We're not telling you what to do or just sharing ideas. If you need advice, call your registered investment advisor, call your broker. That's what they're there for. Give you advice, provide you with guidance. There's a disclaimer.
Excellent.
With that, let's get started. Let me share my screen. And I think what we'll do today is usually Will and I, we do these shows in the morning to help answer questions you may have about the Market Chameleon tools, data or analytics. I think today we'll focus on just demoing a new tool that we just released. I think, if we get questions on that tool, then I'll stop and try to answer those questions. But if you have any other questions, we usually do use that time to answer questions. We'll just leave it for the next shows. And as a reminder, I'm going to be gone for the next 2 weeks. Will's going to take over the show. So he's got some guests that he's going to bring on. And, we'll start back up when I come back. So I'm on vacation for next 2 weeks. So let's skip the pre-market movers as well, just to save some time today and demo this new feature. And I think what I'll do is I'm going to use SPY as my example today. So I'm going to go to SPY, and under tools, there is a menu item right here, intraday returns. Let's click on that. And when you get to this page, this tool, it analyzes the particular symbol you're on. We're on SPY. It analyzes intraday returns. Okay, so a lot of times you'll look at distribution of returns and you're referencing, close to close, open, high, low, close. But there are a lot of things that are going on within the day. As you could see here, let me just show you guys really quickly. If I go to the daily VWAP, right, we've got lots of stuff going on each minute of the day. And what we want to do is answer a few questions that we may have using this tool by asking it questions. Well, what does SPY, for example, tend to do between certain hours of the day? So maybe, for example, you're looking at SPY and it's 3 o'clock, right? The market closes at 4 o'clock. Right now it's 3 o'clock. We've got an hour to go. You may be looking at the straddle, the 0 DT options and saying, well, the straddle is priced at whatever, $1.50, right? Buying the call, buying the put, $1.50, which may imply a certain percentage move. And you may want to know, well, how does SPY tend to move that last hour or any other hour between the days? So let's give an example here. Let's say I'm really interested in right now, the market SPY might gap open, right? Let's say it does open here, right? It's up in the day. So I can't do anything about that move. It's going to open where it opens, right? So I can't, if I have no position, there's no way for me to capture this 0.3% any longer, because I'd have to do that, have the stock at yesterday's close. But let's say I'm flat. So right now I'm flat. The stock opens wherever it opens. And now I'm curious to know, well, what does it usually do between 9:30 at the open and 4 o'clock? All right. So let's start with that. I'm going to choose here. I'm going to go to 9:30 a.m. and I'm going to set this to 4 p.m. So full days of trading, right? Full days of trading. And I'm going to recalculate this. I'm going to hit calculate. And then I'm going to get these statistics in the bottom. So what this is telling us over here is, firstly, it gives us absolute returns, simple returns, and then it gives us a breakdown of up moves versus down moves. Okay. And then we get some statistics here, and here you get some insights. We try to kind of describe to you what this is, the insights from these stats. By the way, we did add this here. If you want to explain this report, if you click on this, it's a guided tour. It'll just go through each piece, give you more information. I'm going to close this now. So what is this telling us is that if we used all the data, we didn't use any of these other filters, that in absolute terms, up or down, SPY tended to move 0.6%. So we rounded a little bit, but 0.6%. And then what we did was say, well, what would that translate to the current stock price? So in the current stock price, if we just multiplied this percentage and multiplied times the current stock price, this would translate to a $2.82 move up or down. Okay, so that's the average move from 9:30 to 4 p.m. if we took the intraday move. What about the median move? So right in the middle, the median move is 0.5%, which would translate to $2.31. So this one, just keep in mind, these are going to be a little bit different because we're just showing you 0.5, but it could be 0.5, 1, 2, 3, whatever it is, right? So so that's why the dollar figures are going to be a little bit different because it's using the non-rounded percent. And it could give us an idea like, well, where maybe the straddle is priced in the morning, right? If we think it's going to be a big move today, and where's the straddle price relative to these? Then let's go to the simple returns. And for the simple returns, we see that if we just took all the averages, right, of the returns, it's skewed a little bit towards the upside, 0.1%. So in other words, you could see that probably will come down here. Either the up moves were more frequent than the down moves, or the up moves tended to be stronger than the down moves. So we got to skew towards the upside. And if we took the best upside return and worst downside return intraday, we have an upside move of 2.3%, which would translate to $10.33. The worst 2%, which would translate to almost $9. Okay, so that's using the historical data, and I believe we're just capturing it now, so I think like 16 weeks, but down here you get the supporting data day by day. Okay. Then up moves versus down moves. Let's just separate all the moves to the upside, all the moves to the downside, and analyze them. So here it says that around 54% of our observations, the stock went up from 9:30 to 4, 46 down. So you could see so far it's been skewed, tilted towards the upside. So we have a couple takeaways here so far. The moves to the upside, right? The big move to the upside, magnitude of the moves exceeded the moves to the downside, and the up moves were more frequent. So here, the average of all the up moves, 0.7%, which would translate to $3.12. Down moves averaged 0.6%, which would translate to a dollar move of $2.46. So the idea there is, you know what? I don't care about the straddle, but let's say it's 3 o'clock and you're looking at a call. You're like, you know what? I think between 3 and 4 today, I'm bullish. So I'm thinking about a call. And what is the price of that call option, right? Well, here I could see that, this supports my bullish view more often than not. 55% of the time that last hour stocks moved higher. And on average, if I took the average, it would be 95 cents multiplied by this, downside $1.10. So that would give you kind of a historical perspective of the magnitude of the moves, distribution of the moves, and the frequency, and help you make more informed decisions that way, right? Now, if we come down here, this chart here shows us these moves. So these are summary. This shows us the moves in order of time. If you note, so if you visualize it to see if there are any kind of patterns or trends, if you see lots of reds recently or lots of greens, or are they, so over here, it seems to me, that those moves have been mostly below the average, actually, right? So that line is that absolute average. So you could see that not that many of them are breaking through. And we could narrow these stats down further. So let's say today's Friday. So really, I want to, just look at Fridays. Maybe Friday, it moves differently than all the other weeks, all the other days of the week. So we could take this and just set it to Friday. So how does SPY move between 3 and 4, the last hour, only on Fridays? Calculate that. And now, I get a little bit of a different stats, but it still seems pretty close. What if I just wanted to narrow it down to more recent data, right? So I'm going to say, what, give me just the last 6 weeks. Recalculate it. So now I have only 6 weeks of data. So you could see here, Fridays, typically the last hour, more often than not, it did sell off, but you could see here that big move, right? That one big move was way higher than how much it sold off. So when it did sell off, it was not that, the magnitude of those moves are very small. But the gain here was very big. So this is kind of giving us a view of how SPY moved around. So let me unfilter this. Let's come back. And come back to all days of the week. Let's keep it at, let's go back to 9:30. So start over. And what if I wanted to compare it to a different stock, right? So I'm going to compare this to a different stock just to see, well, how did SPY move, distribution of returns compared to something else in the same time period, right? So if I lined it up in the same time period. So I'm going to put it in here, and I'm going to choose QQQ. So this is SPY versus QQQ, S&P 500 versus NASDAQ 100. So here I could see that in the same time frame, you could see that SPY moved up or down on average 0.6% versus QQQ 0.9. So this is telling us that that QQQ is more volatile, right? Based on those historicals. What about the median move? Same thing. SPY moved 0.5%, 0.5%, versus QQQ 0.7%. So this is giving us an indication, not only is QQQ more volatile, has bigger percentage returns, but now we could visualize and quantify how much, by how much, right? Now we could get a sense of, well, it's about, 0.2%, 0.3% more volatile, right? Than the average SPY. So now we got that frame of reference. Simple returns. We take a look at that. The average returns 0.1%, 0.2. So there's a skew towards the upside. The best return in SPY versus best return in QQQ, 2.3% versus 2.9. Worst return, 2% versus QQQ, 2.3. All right. What about the up moves versus down moves? Well, here we see 53% of SPY moves were up. Let's say 54 versus QQQ, 57 or almost 58%. So QQQ had more frequent up moves than SPY in this time period that we're looking at. All right, so it's doing better within that time frame, and on average, we could see that the up moves here, right, the magnitude of the up moves exceeded the magnitude of the down moves. So it's 0.7% versus 0.9% on the upside, 0.6% versus 0.7 on the downside. And that gives us now a clearer picture of how two assets performed in the same time frame, versus each other. Okay, let me take that out. Let me go back. So what about an event? What if the Fed's about to announce interest rates, and we want to know, well, how did SPY tend to move right up into that event, or maybe even after? Right. So let's do that. I'm going to pick interest rate decision. So this is a relatively new tool, so I don't think we're only going back so far, I think, 4 decisions. Okay, but this will keep accumulating, so it's going to get bigger and bigger. But let's say on the interest rate decision, we want to know, well, how does SPY tend to move ahead of it? How does it tend to move leading out of it? So let's do ahead of what time is the Fed decision? Usually 2 o'clock. So let's see what happens between 1 p.m. and 2 p.m. when there's an interest rate decision. Okay. So again, we only have so far 4 observations, but here's what it looks like. On average, it moves around 0.3%, which if we translated it to this current price is $1.19. Of course, if you're doing it right into it, it'll give you wherever the price is at that time. The best and worst move heading into it, 0.5% to the upside, 0.4% to the downside. Average up move, 0.3 versus average down move, 0.2, and it looks like 50-50 so far heading in. So this is before the announcement, right? This is what it looked like before the decision. So let's say we want to see the last hour, right? Now they announced it, so we're going to keep it on the days where there's an interest rate decision. What happens the last hour? So let's go to 3 o'clock to 4 o'clock. I'm going to recalculate it, and the question we're trying to answer is, the Fed announced it. Now you got about an hour at 2 o'clock. You have an hour of the markets consuming the information, reading whatever statements came out, trying to interpret it. What happens then the last hour of that trading day? Calculate that. And here we see that on average, it moves around 0.8%. Okay, the median return 0.7. Again, this will, for convenience, wherever the stock is at that point, it'll show you what it translates to a potential dollar move. Simple returns, okay, minus 0.6. So far it was skewed to the downside. Best move 0.3, worst 1.6. So remember, it's not the entire move, it's just the last 1 hour. So that doesn't include from 2 to 3, okay? Or the whole day, just that last hour. Average up move 0.2%, average down move 1.3. So you can see here, it can still make pretty significant moves. And so far it's been 50-50. The last time it was up. All right. So that's the intraday analysis tool. Now, of course, if you go to a different symbol, NVIDIA, whatever, then you could use it for that symbol. Okay. And this is where you'll find it, intraday analysis tool. So we have 8 more minutes. Let me see if I could cover, unless you have questions, Will, I'm going to see if I could cover the next tool.
Yeah, nothing's popped up yet, D.
Okay. Under options here, we have this tool 0 DT option strat. So this here is, so we're not open yet. This will change when we open, but there are essentially there right now 2 main ETFs that have 0 DTs every day, SPY and QQQ. Okay. So what we did was we started tracking the information intraday, and we're looking at the options, we're looking at the stock movements, and then once the market opens, you could kind of start comparing what the two versus each other. So this is going to start updating, 15 minutes after the market opens. So I can't show you, I can't go back to yesterday's right now. So I can't really show you, but this is what essentially it'll look like. Market opens up and it's going to show you, okay, and you'll be able to move this around. But let's say it's 10 a.m. It's going to say so far in 10 a.m., this is where the SPY straddle is. Let's say 1%, right? And it's going to compare and say, well, if we historically looked at SPY at the money straddles, 0 DT straddles, where were they priced? And let's say they're 1.5%. Okay, I'm just making it up. Well, then it'll show you that based on history right now, that is off. The straddle is at a discount, 0.5%. And you can move these around days of weeks, events, and so forth. All right. So that's one analysis. Then the next analysis it's going to show you is at 10 a.m., same thing. We're going to look at the straddle. And let's say it's 1%. Right. Then we're going to compare it to a different benchmark. Well, if the straddle is implying a 1% move from basically 10 a.m. to the close, right? Because that's what the straddle is. It's saying, from now to the expiration. Well, if it's implying a 1%, what did the stock actually move between 10 a.m. and 4 p.m.? Okay, so this is so the first one looks at the option price versus historical option price. The next one looks at the option price versus the actual move in the stock. Because if you buy an option straddle for 1%, and the stock moves 1.5%, right, by the end of the day, that straddle is going to be in the money, right? Because it's going to move by a bigger magnitude than to cover both the cost of the call and the cost of the put, and then some. So it's going to be in the money in one direction by more than the cost of that strategy. And then it's going to show you if it's at a discount, right? What type of discount or premium. So right now I can't show you. I don't have a way to go back on this right now. So that's what it's going to show. Here, it's going to give you some more supporting evidence going back in time. So from wherever we're at. So this is all based on, the time of day. They'll show you where the straddle was historically versus the actual move. And if you want to go back in time, just slide this. Okay, just keep sliding this over. But it's defaulted to the most recent weeks. Most recent, I think, like 3 or 4 weeks. And then here, it'll show you a breakdown, again, of the average moves in the stock, up and down, the ratio. And over here, we're running out of time, but I'm going to go a little bit quicker. It shows you a breakdown of the percentage of times that the options underestimated the move versus the percentage of times the options overestimated the move. So underestimated the move means that the stock moved by a bigger percent than the options implied. Overestimated means that the options were overpriced and the stock did not move by enough to cover the cost of that straddle. What about how much did it error by? How much did the implied move error by, or the market, right? The market made a prediction, then there was an outcome. What was the average error? That's what we want to know. Well, when it underestimated it, the average error was 0.3%. In other words, if on average the straddle was priced for a 1% move, and when it underestimated, the average move was 1.3%. Okay. What about the times it overestimated? It overestimated by an average of 0.28%. Okay. It's kind of even there. So that you could do for SPY and QQQ. So let me go this last one. I have 2 minutes left. SPY versus QQQ. Now, this goes a little bit into building models. And what is this trying to do is say the following. Can I use QQQ, okay? Can I use the QQQ straddle as the independent variable to try to predict or price the SPY straddle as the dependent variable, okay? It's a typical linear regression, simple linear regression. This is what it looks like. So what it's saying is if these two are correlated, right? If these two are correlated, then can I say, is the SPY straddle overpriced or underpriced in the market based on where the QQQ option straddle is priced? Okay, so if QQQ is 1%, what do we expect SPY straddle, and where is it right now? So unfortunately, we're not open yet, so we don't have the app. Until we open, we can't see the actual prices. But what this does is run through a regression, and it will give you some stats here. On the red dot, it'll show you where it is by versus the line. So you could see here a linear regression. It's drawing a best fit line. But you're not going to predict exactly, right? There's no way to do that because then it'll be a perfect one-for-one correlation. But it shows you where the best fit line is versus the historical residual values, how much they varied around that line. You will get an R square telling you how strong that relationship is. You'll get a p-value, so how significant it is. So you want a small p-value and your standard error, and that will be the equation, okay, from the simple linear regression model. So once we get more into model building, I'm trying to start it out with the most simple. You want to always start out with the most simple model until you build up more complicated models. But the simple linear regression will be the most simple one. Okay, so what does it do? This model takes the QQQ 0 DTE options, right, based on the time of day, compares it to the SPY 0 DT options, same time of day, and say, well, where's SPY straddle price relative to QQQ? And if we use our regression model, where do we think it should be priced and how much are they off? All right, so right now we're at 9:31, guys. I'm going to let you go.
Hey, D,
again, I'm not here. Yeah.
That was great. We did have one question. Lawrence was looking at some diagonals. He was asking trade ideas generated automatically during the day. He said, are the trade ideas updated throughout the day? The trade idea cards? Do you know?
They're updated throughout the day. Yes, it's going through, cycles of analysis, and then they update throughout the day.
Awesome job, Dima. You have a great vacation, well earned. Come back fresh and excited. We expect some pictures from Europe. Can't wait to see them. Awesome job, my friend. You have a great holiday.
All right, thanks everyone for joining. Stay safe out there. Have a great trading day. I know I'm going to miss you guys, and try to see if I could log in and answer emails while I'm out there. But can't wait to get back on the show. So it's going to be around two weeks.
All right, and I will see everyone Monday of next week with a surprise co-host. All right, D, have a great day, my friend, and a good trading day to all the chameleons. Be safe out there. See you, buddy.
Thanks, Will. All right, bye.